What is good, Tsla family? It's Ray J back with another video, and in this one, I want to talk about what's going on with the overall market and break down some very important things about Tesla that you need to know moving forward. I'm also going to talk about what's happening to SPY or SPY and many other tickers out there, and talk about some very important supply and demand zones, which are going to be very helpful when it comes to trading in the markets and also looking at Tesla because what happens to the market as a whole will affect Tesla as well. So I want to break down some very important things, but before I do anything like this, let me just mention a couple of things. I am personally not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just about 5 days, so check it out before they run out. With that out of the way, let's get on with the video. Anyways, looking at the market, right, we can actually look at SPY and kind of dissect what we've been seeing over the last couple of days. And we could see we have this clear demand and supply zone, like way below here and also above here. And also, we have this area right here in the center where we have a very tight amount of supply and demand, or you could say it's like support and resistance, like it's very tight. Then we have this one critical level, like right here, which I just want to call out at least in just a couple of minutes. But once I break down these levels on SPY and which way it could end up breaking in, that's going to dictate which way this thing is going to go. And in doing so, this is going to help you build a much better understanding of how the market may move. And once you understand SPY, once you understand what's happening to the algos, you're going to understand Tesla a lot better because Tesla is going to be dictated by these algorithms. I'm going to break this all down in just a few minutes, but let's first talk about some news and something going on for tomorrow. All right, so when it comes to the market, tomorrow we have PPI coming out. It's just like CPI, okay, except it's going to be from the producer side. It's coming out 1 hour before the market opens, so expect some volatility because of it. And then after that, we have the Michigan Consumer Sentiment Report at 10 o'clock a.m. Eastern Time. That's going to be very, very impactful too, but not as big as PPI or CPI. So make sure you're ready for all of this volatility. PPI is going to be the big thing we're watching for in the morning, and I'm going to break this down in just a few minutes. Let's also talk about Tesla. Tesla's issued licenses to Volex to build its NACS connectors, which is some good news that came out for them as they're once again increasing their licensings for their different products. And in doing so, this is going to help them gain more exposure to the different connectors out there, continue to expand their charging network, which is going to build in more revenue and more growth for the company as a whole. But we did have some bearish news that came out just now, and that is that the US has opened a new investigation into a fatal Tesla crash in Virginia. This is making all the headlines right now. And whether or not Tesla was involved or like Tesla was responsible is yet to be determined. But with all of this going on involving the autopilot, the NHTSA is once again on Tesla's tail, and that's nothing new for all of us. But with this news coming out, this is a little bit more bearish for now. We'll see if this continues to make the headlines tomorrow. Please keep this on your radar because this is technically some big news. Now, as far as Tesla goes, the volume was 109 million. Not that bad, very close to what the average volume has been. And then looking at the short volume, it's going up just a little bit more at about that 51% mark. So it's almost 50-50. We're seeing a little bit more shorting on Tesla, though, relative to the overall volume. And short volume is now making up the majority of it. So we're seeing a little bit more selling on Tesla than buying. And then to add on to this, looking at Morgan Stanley, they gave Tesla an equal weight rating, the last analyst to really give us anything. And going forward, down here, we have our price pairs ratio declining a little bit more. That tends to be a bearish signal. It's not that bad because it's not really like tanking like moments like this. It's just like slowly declining a little bit as Tesla's losing some relative strength. And then compared to the market has declined a little bit, and so is Tesla, once again following the trend. Looking at Fridays, Tesla tends to be green only about 49% of the time, so it's almost 50-50. And we tend to see more volatility during the third, fifth, and sixth hours of the trading days. So there's a slight adjustment right over here. So be ready to watch Tesla during those hours as we tend to see more green, at least historically. And then on top of all of this, looking at the short interest on Tesla, this went up a little bit compared to before to about 36.4 million Tesla shares being shorted. It went down very recently, and we'll see what happens when the data comes out for today. I believe it may have gone up just a little bit as the short volume increased as well. But now let's talk about the market. Why was today such a crazy day, and how come we didn't see the market pump after we got some bullish numbers? But what were the bullish numbers? CPI came out, and the numbers were pretty decent overall. They were, in my opinion, very close to expectations, if not a little bit better. And the market ended up getting this pump after the CPI numbers came out. And let me just show you them in just a couple of, just for like a very, really quick, brief update, because I did go over these in the morning. But looking at core, this was basically as expected month over month. CPI was month over month as expected. Core's CPI year over year was 4.7%, a little bit lower than the forecast, but very close. Then inflation year over year was 3.2%, very close to what the expectations were. Overall, decent numbers as expected, if not a little bit lower on some ends. That's why the market liked it in the very beginning. But then what happened was the markets, let me go back here. The market got this really nice pump, right? We pumped very nicely. I was calling this move out in the morning, right? We should be expecting a pump because typically when you get good data, the market should pump. Yes, we got the pump. It was very awesome to witness, but this was a liquidity grab from many of these institutions. And then what happened was you could argue different things. You could argue that the market was too weak to sustain these high levels, and that's why we ended up selling off. You could also argue that this was just a trap. They were trying to trap retail investors, trick them in doing something that's very ironic and unexpected. And that's also very possible. In doing so, they caused lots of people to lose money, which made them money as they're taking positions on the opposite end. But looking at this price action, I just want to remind you guys that there's lots of manipulation in the markets. Unexpected things can sometimes happen that are completely illogical. Historically, when we get good CPI, 90 plus percent of the time the market just pumps, maybe like 95% of the time the market holds up. This time they give us this rug pull as a chance for them to just make money off retail, to do something completely different, in my opinion. And maybe you could argue the market's just too weak to hold these high levels. You could argue that too. But either way, we can't complain about this. The best thing we could do is just read the trend and then adjust accordingly. I did not lose money today. I made money by simply getting in and getting out quickly. Once the market showed some signs of weakness or reversal, I got out of my long positions. Once it reversed, I was actually not available at that time, so I didn't really do anything else from there. But just so you know, you could still trade this. You just have to be very fast. You have to be very different from the majority of the crowds, and you have to be able to adapt to a market and play both sides very, very well. I want to make that as clear as possible for everyone. But we do have a trend that happened for the last couple of days. Look at the market. If we go back for the last few days, the market got this like pump on, I believe that was like Monday. Then for Tuesday, we dumped and pumped basically after we gapped down. For Wednesday, we basically dumped. We actually gapped up, then we dumped, we pumped, then we came back down. And then today, we pumped, we dumped, we came up a little bit before coming a little bit down. So we're seeing lots of volatility and a lot of these pumps and dumps in the market. It's almost as if August has turned to the pump and dump month. But looking at it, we could actually notice a very similar trend. So if you were to break these down in a very similar manner, you will notice that we tend to have a supply zone up here, lots of resistance, and we tend to see SPY getting rejected between 450.5 and 452. So if we do get a pump tomorrow to this high level, you're going to be watching this as resistance, as we historically have gone rejected here many, many times. If we break this high, 452, we have the potential to push up to 452.8, then potentially all the way up to 454. But we have to break this level first to get confirmation. So far, there's nothing like that. So that's this blue rectangle right here, our supply zone. For excuse me, sorry guys. For the middle area, looking down right here, I just wanted to mention that in the middle, we see lots of chop between 448 and 449 going back and forth and back and forth. So lots of chop tends to happen around here. So you're going to be watching lots of sideways price action around here. If we break below this, right? If we do end up breaking below 448, there is one zone that's worth mentioning. That's 447.5. We saw SPY actually bounce off of this in the past and then break, reject off of it today. So that's another zone to watch for. And then for demand, we tend to see lots of demand between 446 and 444. If we get below 446, look for a potential bounce if we do end up holding. And then 444 is where we tend to see lots of buyers step in and push the market in the opposite direction. But if we break below 444, the market's going to come all the way down to retest this low down here and probably fill the gap down to 442 at that point. So those are your very, very key levels. Okay. Notice how when we hit this blue line, we tend to get blue rectangle, excuse me, we tend to get these rejections around this yellow area. We tend to see the market getting bought up. Okay, so remember these ranges very carefully, especially when trying to trade for tomorrow. But here's the thing about this. If we break either way, that's going to determine a much bigger move and a break of the trend. So once again, break the blue line, break this entire resistance, market's going to push up a lot higher. break below this demand zone, and the market's going to come sinking down a lot lower. I hope this is as clear as possible. When SPY makes these moves, it's going to be uh, very correlated with Tesla. Tesla's going to follow it as well. So when you're trading, make sure you watch this. What do I think is going to happen tomorrow now? What do I predict? I want to be honest with everyone. I can't predict the market perfectly. The market's gone so crazy. It's made it very, very difficult for any retail investors. And that's why it's best to be prepared for anything. But I do want to note that PPI is coming out tomorrow. And because CPI was decent, there's an increased probability of a decent PPI. But there will be high volatility at about 10 o'clock a.m. or 30 minutes after the market opens for New York time or Eastern time. So what my best prediction would be, and I can't really promise anything, we just want to watch these levels carefully just to get a good gauge of what's happening. But I would anticipate that we might get a pop tomorrow since we are technically at this demand zone. And because CPI came out decently, PPI may be decent too. I don't know what PPI is going to be, so I can't say this with high confidence, but I think there's a increased probability of the market getting a retest of 448 or higher. If it breaks above 449, watch for a pump to back to like the 450 area. But one thing I want to notice that the majority of the time in this trend, we've been actually like dropping. So the bears do have a bigger edge. So if we do get a pump up here, we might see a big dump afterwards. So I'm anticipating like a pump and a dump again. And we might see a retest of 448. If that fails us, watch 447.5. And that's likely not going to hold that well. We're probably going to come down to like the 446s if we break below 448. 448 is going to be a very key pivot zone. So my best prediction would be another pop in the morning, a drop, and then a sideways price action and some potential downside. We may even see a red Friday because once again the market's just not looking that great. We didn't really get that great of a close despite how good CPI was, and not even CPI could cause the market to break out insanely hard. So that's why I'm going to be as open-minded as possible. But I am leaning in the direction of a pump and dump for tomorrow, and I think this will affect the whole market. So now moving forward, let me just mention one thing about SPY. You'll also want to watch the levels very, very carefully. So watch supply and demand, support and resistance as well, right? Break 448, then we have like the 450 area as the next major resistance. If 450 breaks, there's 452, and we have to break that to go much higher. If we fail to do so, we have support. All these resistance levels become supports. I have much tighter levels if you are interested in like scalping, like really, really tight setups. You can look at these levels too if you're interested. If we break below 446, you're going to be watching a 445 to 444 retest, this entire zone right here. If 444 breaks, expect a rug pull down to 442. Those are your very tight scalps. What do I think is the most probable outcome? Well, honestly, guys, I can't predict this, so please don't criticize me if I make a mistake or I'm wrong, because I really can't predict this market perfectly. It's so crazy. But I think it's very probable we're going to see upside in the morning, a nice pop again, a retest of either 448, if not 450, then a rejection and another drop, and then maybe a bounce at the end of the day, or the market's just going to hold around these low levels. But my gut tells me we're going to close a little red for Friday, and we're going to end up closing a little bit below where we are for a somewhat weak close for the week. And I think that's very probable. For Tesla, I think there's a good chance Tesla's going to try to get a bounce, a retest of either 247.5, if not 250. A rejection off that, then it's going to come right back down to 245 or so. I think that's the most probable outcome. And then we may even get another red close on Tesla because I didn't really like the way it closed. It was just not that strong. So I'm looking for a pop, then a drop, and then sideways price action. And then watch these levels carefully, such as like 250, 247.5, the 245s, 244.5. And 242 as supports. If 242 breaks tomorrow, then you're going to be watching 240 specifically on Tesla. Now, one thing I want to call out on Tesla would be the bigger trend. So this is what Tesla looks like right now. So Tesla has a falling wedge that is developing, but there's no sign of it breaking out on the bigger time frame. So if I go on like the 4-hour time frame like this is what Tesla basically looks like. It's basically getting very, very tight right now, and it's continuing to get tighter, right, within this falling wedge like pattern. But it's just a matter of time before we see what the real move is going to be. So if Tesla wants to get some kind of like balance, we're going to have resistance also like around this like 250 area around there. It's going to be tight. We might get a rejection off here and come down even lower. And the trend is more bearish right now, favoring the direction of Tesla filling the gap down here on the daily. So there's this gap down here on Tesla's daily chart right here around this 235 area. There's a good chance that that's going to get filled soon if we break below 240. So keep that in the back of your mind. I know that's kind of complicated, guys. I'm just saying the bigger trend is more bearish, basically the much larger trend, but the smaller trend For tomorrow specifically, we could see a bounce and then a drop intraday before a sideways price action, maybe a somewhat red day. I hope that's as clear as possible, right? The smaller timeframes are different from the bigger ones. The bigger timeframes look more bearish for Tesla. The smaller ones look like we could get like a little bounce, then a drop after that, and then maybe a red close. All right. So for Apple, same thing. I'm going to be anticipating a little pop in the morning, maybe a retest of about 180, if not 178, a rejection, this thing to come down, and maybe a somewhat red close once again around 177, if not a little bit lower. That's what I'm anticipating for Apple. For the triple Q, it also had a falling wedge that ended up failing to get much of a breakout. I'm going to be anticipating a nice bounce in the morning, a retest of about 372 or so. If not, it's 374. A rejection again, maybe it's going to come down to these other levels. And we're going to be reading the trend very carefully, of course. Do not solely trade based off what you speculate. Look at the trend, look at what the chart tells you. If we're looking like we're going to reject, be very careful if you're holding your calls or your long positions, whatever long position you have. It's okay to exit when you become uncertain or if the market looks like it's going to reverse. So look for a pop in the morning, a rejection, likely a big drop as that keeps happening almost every day. You might see this thing retest 368 or so, if not a lower level, then bounce off that. And I still think it's going to close a little red. I'm leaning a little more bearish for Friday. For Nvidia, I'm going to be looking for a pop again in the morning, maybe a retest of about this 425 area, if not 430. And if that breaks, then there is potential for about 436. I'm not really counting on Nvidia to break it because even though CPI came out pretty decently, the market still was not able to hold up that nicely. So we might see Nvidia hit this level, reject off it, and start slowing down. And I think Nvidia may close a little red around 420, if not lower. If 420 ends up breaking for Nvidia, you're going to be watching 415, 413, and like 410 at those very low zones down there. I think it's looking not the best, in my opinion. I'm going to be looking for like a pop and a drop again tomorrow, and maybe a very flat close, if not a somewhat red one. It really depends if we hold 420, but that's the direction I'm leaning in. Microsoft has a very, very nice setup in a way where it's kind of easier to read than other charts because it likes to bounce off 321 many times. You're going to be looking for a pop to about 324 or so, maybe a little bit higher, a rejection and a drop to about 321, then another bounce off that, and a somewhat red day seems very possible for it. For AMD, this thing is also trading kind of sideways, not really doing much. Look for something similar today because PPI is coming out. It could cause a pop in the morning. 112 to be retested, if not 113. A rejection after that, a big drop to 109. Then sideways price action once again. For Netflix, I'm seeing the same thing, a pop and a drop. It could be retesting about like 437 to 440 before coming back down to about 430 and then closing a little bit red. That's what I'd be anticipating. The NASDAQ at the same time looks like it could do something similar. It looks like it may get a pop to about this like 14,000 area, if not a little bit lower, like 13,800. The trend is looking more bearish as it's continuing to downtrend. But I'm going to be looking for a pop, then another drop, and sideways price action for that. Same thing with SPX. It really depends if we could break out or not, but I think that's the most probable thing I could say based off the trend so far. And it is what it is. I mean, it looks like it could try to get a retest of about like 4,500 before coming back down. That's another possibility, if not a little bit higher than that. The 200 EMA should be watched on the 30 minutes time frame. What is a little concerning about the markets would be the VIX, because the VIX looks like it could be forming like a inverse head and shoulders. It could end up coming down tomorrow a little bit lower to retest the 200 EMA as the market gaps up, trade a little sideways, and then if this thing starts rocketing to the upside, it starts pushing to the upside. This could be a bearish signal for the markets as well. There's a possible inverse head and shoulders here, suggesting downside could be imminent. We're going to be watching to see if that ends up taking place. The dollar could end up coming down a little tomorrow in the morning to retest 102.5 at the 20 EMA before bouncing, which tells me a pump and dump is a one possibility. For Amazon, we're going to be watching to see if this thing could retest and hold above 139. If it does so, 140 is a possibility. If it rejects off the 50 EMA, we're going to be watching it come down to 138, 137.8, and then all the way down to 137. I think it may actually get a red day tomorrow, kind of like pop then drop. Same thing with Meta. We might see something very similar, a little pop to the upside, a retest of about 310 or so, a rejection after that, then more downside. It could also be forming like a head and shoulders right here. So we could be forming like a right shoulder before it comes down to about 302. And if 302 fails us, it could come even lower than that. 300 it needs to be watched. If that fails us, then we could see this thing retest very close to the 290 area. We're going to be watching 297 and potentially like 290 below that if that fails. But just to be clear, it's not looking that great from a technical standpoint for the bulls. There is a possible head and shoulders developing, and that's what I have for this video. So I just want to thank you all so much for listening. I know you may not have wanted to like hear this. You want the market to hold up, but I just want to read the charts and be as honest as possible. So please watch for a potential pump and dump tomorrow. Watch for PPI coming out 1 hour before the market opens. Get ready for some high volatility. Watch supply and demand zones. Watch support and resistance, and do what you have to do. Thank you for listening. Have a great day. Get ready for tomorrow. It's going to be crazy, and I'll see you guys in the next one. Market to the moon as the long term is still very bright. And peace out.